right, welcome back. This is Business AM. Thank you very much for joining us here on Metropole Television. This is your biggest headlines that you're waking up to this morning as you start your business day this Monday. And I want us to look at exactly what we have before we intro the panel that we have for you this morning. And our story begins like this. Delays from brokers, agents and banks failing to wire premiums to insurance firms covering risks saw the outstanding premiums in 2020 jump up by 6.7% to 38.1 billion as the effects of the pandemic continue to affect cash flows of insurance intermediaries. Data from the Insurance Regulatory Authority (IRA) shows that the unremitted premiums had dropped from 44.3 billion in 2018 to 35.7 billion in 2019 amid threats from the IRA to deny market players operating permits for breach after 2020 saw 20 of the licensed 56 insurers in the rann run into capital adequacy challenges. Now, this comes at a time when the IRA is pushing for premium claims in the economy to be settled within 30 days from the current average of 90 days. General insurance claims incurred by insurers rose 16% to 59 billion shillings in 2019 from 49 billion in 2015. Good. That's exactly where we start this morning. Now, to help us really go through the biggest headlines that you're waking up to this morning, we are joined by Joash Onsando, who's a public policy analyst and political strategist. We're also joined by Adelaide Odhiambo, who is the CEO, Blue Wave. We're also joined by Anthony Mwangi, Chairman, Association of Insurance Brokers of Kenya. Let me start with you, Adelaide. As they say, ladies first. 38 billion. That is insurance claims that nobody knows when they are going to get them. But then two issues. Adelaide, actually three. Number one, 20 of the 56 licensed insurers are running into capital adequacy issues. Two, the regulator is pushing that these claims should be paid within 30 days. But then, on top of that, there's this push and pull between that chain, between the insurers, the intermediaries, and also the co-insurers. So let's understand, where is the problem? I want us to start from this level. 38 billion. That is a worrying trend, isn't it, Adelaide?
It is an extremely worrying trend.
Yes.
And before I even get to touch as to who's to blame, we need to understand that we are sitting in an industry that has been very slow to innovate.
Yes.
And a lot of that, and we were just having this chit chat with Anthony before you walked in. And you don't want to go straight into pushing into regulation and legislation, yet we are not fixing the core problem. The core problem, if it's premium collection, then there has got to be mechanisms and measures in place in this industry that ensure that is a no-brainer.
Yes.
We don't have an issue of deposit withholding in banks. Banks have systems, infrastructure, technology to ensure that any collections are well managed, they're well audited, well vetted and secured within their servers.
Yes.
There's a big pothole, there's a huge sinking hole within our industry where these premiums are just emerging. And we all know that there are the big players there are select few big players who are controlling, largely controlling this industry. And to penalize an entire group of intermediaries and brokers for the sake of a few rogue, larger and let's say greatly influential brokers is very punitive and unfair. And it's a situation where we are stuck in the Stone Age because we have been unable to innovate appropriately to be able to overcome some of these issues. It is very sad that you quite frankly, Simba, just a handful of these brokers are holding that 38 billion.
Yes.
All the other hundreds and thousands of little small agents and brokers, intermediaries are really going through the process. So I guess the first two things that are very important here are nib the problem at the bud and focus on innovation. Nib the bud. Who are the culprits? Where is this 38 billion? Because to throw 38 billion out there in an ocean is almost laughable. Let it be very clear that this 38 billion is held by 1, 2, 3. And these are the repercussions that we want to do to be able to ensure that this 38 billion is recovered. And then secondly, move into innovation and move in very quickly. We have been speaking about innovation in this industry for close to 2 decades.
Yes.
It's time to just have a shift in innovation. If agents and brokers have appropriate and adequate technology platforms where these premiums are deposited, audited, and monitored real time, we will not be talking about withholding the premiums. And clients need to have the data, the insureds need to have the data and information on where their policies are holding, confirmation messages automatically generated that your home insurance policy is covered with this insurer up to this level, real time. So I think we are focusing on the wrong problem, and it's time that we just rise up and be frank about where the issues lie, expose the monster. Let's see how huge our monster is.
Yes.
If we don't see the size of the monster, we'll not be able to see how to kill it.
Pretty much.
So
yes.
Those are my concerns, yeah.
Adelaide, I'm going to come back to you, Adelaide, on that, on this 30-day period that the regulator is trying to push to have these claims made. That on the side. Anthony, let me bring you in as well. I mean, who's to blame? There was another report that was released by the regulator sometime last year that also stated that brokers had the highest amount of claims that are not being remitted. But you can actually see what's going on now. There's this push and pull. The insurers are actually blaming the brokers. The insurance companies are also blaming the brokers. So who is really to blame in this chain?
Thank you very much, Simba, and thank you for having us once again.
Yes.
Let me say by starting that the whole issue of 38, 43, or 44, all the figures that are being thrown around, first of all, can we interrogate where do that figure come from?
Yes.
Who is this person who is coming with this figure? What proof really do they have anywhere on earth that they have this figure? And if you allow me for a minute, I would say the makeup of this figure, how it is arrived at, is at the end of the year. Insurance companies audit their books. And at the audit time, they basically for audit purposes, remember that report purely they indicate there, even the disclosures that we make with them, whatever figures that are indicated there are for audit purposes.
Yes.
So that you can be able to help your auditors arrive at some sort of a figure. And now, unfortunately, those figures go to IRA and they distort the information out there that brokers, agents, and everybody else owes money. Let's even now go perhaps what Enright was actually talking about. In law, the only person who is supposed to basically collect money under our section 156 on their own are brokers. The agents and direct clients are supposed to pay directly. There ought not to be any issue of even collecting. They're supposed to be paying there. So the first question is when you're asking who is to blame, is to say, how did even a direct client ended up having an outstanding premium? You ask yourself that.
Yes.
How an agent respectively be owing money to an insurer? Because it's one and the same thing. There cannot ever be an agent and an underwriter. They are one and the same thing. So those figures should completely be removed from the figures. Now, if you look at the business that we have actually been producing in the last couple of years because of a lot of environmental issues, we are not controlling more than 30% of the business, right? That's how serious our business has been interfered with in terms of the distribution channel framework. So there is no way we'll be owing then the 60% of the outstanding premium, and yet we are controlling a very small portion of money. So in a nutshell, I would say the figure is not correct.
Yes.
And I would say this with a straight face to anybody, and that's why I think the matter is in court.
Yes.
The whole issue, and I think, is because there is no consultation between anybody. Whoever releases those figures to the public, we even called the editor of the Daily, I will not go into details, the Daily who actually published that report. And we have had even meetings even with their own lawyers. We happen to share same lawyers. in some other circles. And we even called them because we wanted to sue, but then we realized we are going to face with a problem because so we had a meeting even with the auditor and say, where is the information?
Yes.
Because I think fair to us is that you need to come and we give you our side of the story. Now, let me even now take you. Currently, out of almost 200 something insurance brokers, those who are my members are close to about 160. And about 150 have been licensed by the insurance commissioner. There is not a single broker who currently is insured who owes any insurance in the company money. We had to get clearance letters from insurance companies, a very, very, very rigorous exercise that we have undergone those 2 years. Then where is this other money coming from? And therefore, that's what I'm saying. How can we get clearance letters from across the board from all our insurance companies? If you connived and you got that letter from any underwriter, then you should not be saying with the both sides of your mouth that then you are owed any money. So we don't owe people money. The only money that could be owed that cannot be a debt is perhaps what is being transacted currently. But the issue of 38 billion, that to me is overstretched. It is not correct. And I think to go back to your question, who is to blame? It is the information generation that is done, lack of consultation with everybody, with all stakeholders, because I don't see why it's not possible for all of us to sit across the table, IRA on one side, ACI on one side, AIBK on one side, and say what is not happening. So that when this information is removed, then we all can be there. And let me also add and say, people may think that you are bashing brokers here and there, but basically what you are doing is that you are destroying the insurance, the trust that already we have mistrust issue in an industry. So the moment you come and start then giving these kind of figures, the neutral trust that they even is remaining is also lost.
Yes.
Yet how we have survived for 50 years with these kind of figures outstanding there. So really, I don't think there is a mountain that is before us that sometimes someone would want to create. In any case, I don't see, like Adrian was saying, small brokers. What? And I have asked this question before. What power do you have over Britam, Jubilee? Because tell you, get out. I mean, you give me my money or I close your account. So there's really no way a small broker who is doing 50, 30, 100 million, you would be joking around with somebody who is doing 20 billion shares. It is not possible in the real business we do. And even those people who actually end up owing, it is a business-to-business understanding between those two companies. Because remember, Section 156, it clearly states that cash and carry, that is all. In any court you can never go to, it's cash and carry. Then how did you end up then, incurring that's a big cost? It is your conduct that basically has brought you to that issue. So I think there isn't, in my view, any crisis of any nature. There may be a few issues like any business would have, but we don't have a crisis on premium issue. Not in 2021. I'm not trying to talk about the previous years.
Yes, not in 2021. Anthony, I'm going to come. You're actually the one who's going to clear this conversation because I'll come back to you and then I'll ask you if indeed IRA is the one that is saying, well, it has jumped to this level and they're the regulator. What are they really trying to get at? Especially when you understand this claim with that 30-day period, which I'm going to put to Adelaide next. Just before that, let me just talk to Josh. Josh, you listen to what Anthony is saying. You listen to what Adelaide is saying. Is it the regulator who's sleeping on the job now for to just know where this money is and go for it?
Thank you, Simba. First of all, in the industry and then where part of it didn't make sense to me, and I'm credence to by what Anthony and Adelaide have said, particularly what Anthony has said.
Yes.
When you look at those figures, they say that in 2014 the outstanding premiums were 26 billion. That figure went up to 43 billion in 2018. Then at some point the regulator is trying to blame COVID, and then you can't help but wonder if COVID has impacted the industry in this particular way, then how come there was a 43 billion figure in 2018 and then a 36 billion figure when COVID hit?
Yes.
So there's a lot of gaps that I don't tend to see. I mean, personally, I think if COVID has impacted the insurance industry, that means people are not buying insurance. If people are not buying insurance, then brokers are not getting premiums to and my concern is then what does that mean to the consumer who's reading this report?
Yes.
Because as a consumer, I was shocked because I was thinking to myself, if you think about the cash and carry principle, am I sure that the premium I paid for X, Y, Z is with the insurer or is it with the broker? And if it's with the broker, then it means if something happened today, then the insurer is not going to pay. So I don't know. I mean, IRA needs to come out clear on this. Definitely, I wish we had a representative of IRA on premium on the panel. I see a lot of gap sense to me.
Pretty much. All right, Adelaide, that's it. Then let's see exactly how IRA is trying to really sort of close these gaps. Now they are pushing to have all the claims in the country met within 30 days, away from the average that is 90 days currently under law. Would that start solving some of these issues?
I guess for any insurer to be able to make claim settlement, then there has got to be premiums. There has got to be enough capital reserves, the liabilities, and all the IBNR and all, every calculation that we do from an actuarial perspective to ensure that these claims are paid have got to be on check.
Yes.
We do know, right now there's a big monster, as we are calling it, of 38 billion, where it's neither here nor there where it lies. And it's almost, again, absurd that an insurance company will be sitting pretty in to be able to settle claims. So it is possible to be able to make settlement of all claims. In fact, 30 days is quite short, if you ask me.
Yes.
Once all the data and information and adequacy in reserves and capital is in place, claims should be payable very quickly. I have personal experience where we have been able to settle claims in a matter of hours, from the point of reporting and document collection. And that is very possible with technology. So we need to shift our minds from the blame game, from the industry cartel and controls, and start focusing on hardcore innovation to speed up this process. There is no reason why a funeral benefit, a mortal claim that has been vetted and evaluated, that cannot be done within just a matter of days.
Yes.
These things can be fast-tracked. So the reasons behind the delay are what needs to be questioned. And again, it goes back to the old school technology platforms that some of our insurers are still using, the old age kind of thought processes and claim verifications that are quite redundant. And right now, I think we have been caught pants down when we are told that you cannot work, you have to work from home. And you know that you depend on an archived file to be taken to somebody's desk, to be signed off and taken to the next level, to the next level, to the next level before a claim process can be paid. So it goes to question. I mean, I'm always going to scream that we as an industry are lagging behind on innovation, and we are sitting on a ticking time bomb. And I quite frankly think that our focus is always shifting to the wrong thing. And if all our energies and investment go into pushing innovation in this industry, we will not be speaking about this kind of small pet issues, like claims should be paid within 30 days. This is ridiculous. It's ridiculous, quite frankly.
Pretty much. Yeah. Anthony, clear for us this conversation this morning. And I want you to pick up from where Adelaide has left. 2 minutes, if you may. Is it possible that IRA will start to solve some of these issues, the 38 billion that we don't know where it is, in terms of claims that have been unremitted as of 2020? Is it possible to start solving it by reducing that claim period to 30 days? And Anthony, give me your outlook for the industry in 2021 as we clear this conversation.
Thank you very much. Let me first of all say the whole issue of 30 days is also a fallacy.
Yes.
If you think about the whole issue of how claims are handled. One, it is 30 days from the time people document the full claims and you are issued with what we call a discharge voucher. You are offer and you accept it.
Yes.
But before then, nobody is talking about what we go through and our clients go through when they go in the heart of other service providers, people like investigators, assessors in garages and everybody else. So when we talk about 30 days, clients think is from the day the car crashes to a tree and by the time I get the check. But in the interim period there are so many other processes that sometimes accrue there. Especially when you hear a claim has been sent to an investigator, my friend, you are in deep trouble. And you know you can't dare now call the investigator because then in some quarters, especially if you are dealing with some rogue underwriters, they'll tell you are interfering with our investigations. So you kind of basically allow them almost to go, with the time that they want. They will say we haven't finalized with this file. So the whole issue of 30 days, first of all, I needed to clarify and say, it is not based on from when a claim or is attached. It is from perhaps the time after doing all and you are happy with all your investigations and assessments and haggling about how much you're going to be paid. That is now when you talk about 30 days. So
yes.
In that extent, therefore, I agree with that, right? That then, having done all that and taken all your time, 6 months even to investigate, why then do you need the other 30 days? You knew you had this claim. I mean, you should have done your reserves well. So you can actually be able to pay this claim in 3 days, unless then, of course, there are issues of finances. So to that extent, therefore, I wanted to say, I think we need to break it down, and underwriters, we need to agree with them either, and I would rather we go self-regulation, where we get into some, so, and I think in our office, I have signed a situation whereby we have signed charters with some insurance companies and put them in our policy documents that claims are going to be paid within, and it is a warranty, it is a condition in the policy that you pay this claim within XYZ days, and it works, because now I have something I can rely on. This whole issue of 30 days for me is just basically there perhaps to placate the community and our insuring public, but it doesn't have the weight of law or anything else for that matter, because an underwriter can go away with it. Now, to your question on the outlook of the 2021,
yes.
I think I'm pleased with what is happening, and I think what we saw with the Jubilee posting perhaps one of the largest profits in recent times, I think that's an indication that, of course, perhaps one can be able to explain, because if you look at part of their books, the largest component of their premium is actually from medical, and for the first time, I think in a very long time, they made money from medical. Adrian, perhaps the actuary will be able to tell us exactly why, but I think from a layman's perspective, I would imagine that the fact that there was a lot of sanitization and a lot of environmental issues that we were able to deal with in terms of cleanness and everything, a lot of people never went to hospital. There were fewer accidents, because if you lock people down, then it means there are very few accidents for that matter. Therefore, I think may not be a very good barometer to be able to indicate how the economy, how the industry is faring. But I think I am still seeing some very good signs, because companies now are adopting the technologies. I know, yes, we are saying they are not moving as fast as we want, but I think we are becoming resilient, and now we are adopting this as our new normal. And even when things go back to normal, I think we have found ways of cutting some of the costs. So I think the outlook for me is 50-50, doesn't look as grim as perhaps last year this time. We have started to see now some signs, and we have accepted that this is basically what's going to happen. Even some of the policies that perhaps people would have left because the factory is closed or whatever, we are now seeing them, restated. And I think from where I see it, I may not have the figures from an actuarial perspective, but I think I'm seeing very, very good signs on an outlook of 2021. It's not as grim as we would have really imagined or as we were in 2021. The fear, first of all, has gone. As to what COVID is, we know now we just basically have to live with it. Just more or less like what we dealt with AIDS, even in our medical books. It's how we are dealing with COVID issues.
Pretty much. At this point, let me say very thank you to Adelaide Odhiambo, CEO Blue Wave, and Anthony Mwangi, Chairman, Association of Insurance Brokers of Kenya, for joining us this morning for this conversation. We take a short break, but once we come back, we are still with Josh as we look at other issues that you're waking up to in the economy this morning. Top on that, looks as if personal loans were not defaulted that much in 2020, despite the job losses that we saw. To be exact, 1.72 million jobs. But that is all the way up to quarter three. We still don't have quarter four numbers. What a pity. Once we come back.